So something pretty crazy actually happened when I was doing my research for this video. I was just doing my regular research as I usually do, and all of a sudden, hey everyone, thanks for joining me today. My name's Matt, and the company we'll be taking a look at today for this awesome Watchlist Wednesday is Pinterest. Now, before we get started with that, just need to say this is not advice. Please don't take this as financial advice. If you need advice, please go speak to a fiduciary financial advisor. They'll be able to help you with your specific needs, but this is just for your entertainment purposes only. Also, if you like this video, hope you like it, subscribe, all that fun stuff. It's just a way to show a little support for this channel, but do it at your leisure. I'm not going to tell you what to do. Now, as I mentioned, the company we're going to be taking a look at today is Pinterest. And I'm sure the majority of you know who Pinterest is, so I'm not really going to dive deeply into what their company is. But just in case you're not familiar, Pinterest started in 2012, and it's essentially a social media / search engine website that was originally started with the focus on design and products, but has since expanded into anything you could search for, whether that be recipes, crafts, ideas, how to set tables, or even how to jumpstart a car, and is quickly becoming a very widely used search engine. Now, as I mentioned to you last week, I'm trying to be a little bit more cognizant with the length of my videos, so without wasting any time, we're going to jump right into these numbers here. And I have to admit, first, these numbers are not really that impressive. They're not the best numbers we've looked at for a company. And also, I kind of had a hard time finding a pure play comparison because, in theory, Amazon is also a search engine, and so is Facebook, Twitter, Google, all of that. So the company we will be comparing it to is Twitter, but just keep in mind that it's not really a pure play comparison. First one I have here is their market cap, and I was a little surprised to see that Pinterest has a larger market cap than Twitter. Not by much, but I just always assumed that Twitter would be the bigger company than Pinterest, but I was wrong there. The year-to-date return, it's worth mentioning that earlier this year, like basically around January, that's what year-to-date means, Pinterest was only really around $10 a share, which was actually a drop from what they IPO'd at. But since then, they've increased to over $60 a share. Now, a lot of companies have experienced that same kind of growth as well in their share price. But something I wanted to mention, and as we can see, Twitter's is actually a little bit more stable in that regard, at least in my opinion, with the 33.7%, because it's not as dramatic. And sometimes those dramatic swings can be a little intimidating for me as the investor. But the revenue growth year over year is something that I did find very impressive for Pinterest. Because as we could see, 36.5% compared to Twitter's 2.2% is a huge difference. Now you can, if you want to, make the argument that Twitter has been around longer, so the revenue might not be growing as quickly. But at the end of the day, that's going to be a problem a lot of social media platforms have to face anyway. And so seeing that Pinterest is still going strong with their revenue growth is something encouraging to see and gives me a little bit more optimistic of an outlook towards their future. Price to sales. Now this one was hard for me to grasp, or as they say, this was a hard pill to swallow for me, because 28.43, I know I say it's different amongst all industries, but regardless, across all industries here, a 28.43 price to sales ratio is incredibly high and does show that you would be paying a premium for this stock. Especially taking a look at something like Twitter where it's only 9.78. That's a pretty dramatic difference between those. And I think over time, we'll start to see that price to sales kind of start to decrease for Pinterest. And that might be the better buying opportunities when that decreases. But as we could see, the quick ratio is what allows for me to justify that higher price to sales ratio. 10.48 for Pinterest quick ratio is insane. That is obviously, again, up there with one of the highest ones that we saw. Seems to be pretty common theme amongst a lot of these social media or online platforms, web-based companies. So maybe it shouldn't come as too much of a surprise, but I personally was pleasantly surprised to see that quick ratio being over 10. And Twitter's isn't bad either. 4.36 is definitely something to be excited about. But when you have that number sitting next to a 10.48 quick ratio, it's just hard to make that number look impressive. Now, it's worth mentioning, though, that Pinterest has been debt-free for around 5 years. I think actually a little bit longer than 5 years. But they're not profitable. And that's why we don't have a price-to-earnings ratio up here or an earnings per share, which is a little hard concept to understand if you're kind of new into this world. But the best way I can describe it, and as simple as I can describe it, is the amount of money they pay to generate revenue exceeds what they are receiving in revenue. Now, that is actually a fairly common thing to see, especially across younger companies. And from what I saw, Pinterest is anticipating to turn a profit within the next 3 years. So we should kind of start to see Pinterest's balance sheet just make a little bit more sense, because right now, admittedly, it is all over the place. But again, it's a healthy balance sheet nonetheless, and it's definitely something we should at least acknowledge for Pinterest, is they have a very healthy balance sheet for a fairly young company, less than a decade old. And to turn a profit in an industry like this within 10 years, or hopefully within 10 years, is going to be an impressive but challenge for them. So something that I'll be keeping an eye on as we move forward with this company. Why is this a company that I'd want to add into my portfolio? And there's actually a few reasons coming from the earnings call that made me excited about this company. And kind of going back to the size of this company, I didn't actually realize how many people use Pinterest. I know, like, my girlfriend uses Pinterest, I think my mom uses Pinterest, and a few other people I know use Pinterest, but it's not something where people are always like, oh, hey, did you see that thing I sent you on Pinterest? Like it is on like Instagram or Facebook or Twitter. So I didn't realize how many people use this. From their earnings call, and I'll pop up the graphics so you can see this from their investor presentation, they actually reported that their monthly active users, commonly called MAU, has increased to 442 million people. Again, just meaning that 442 million people across the world use Pinterest on a monthly basis. Now, that's great, but what does that number actually mean? To draw the comparison again to Twitter, Twitter actually has 336 million monthly active users, giving Pinterest almost 110 million more people using their platform on a monthly basis. That alone blew my mind, because I just thought, again, you see Twitter on everything. If you watch the news, you see Twitter. If you listen to like financial stuff, you hear them always talking about people posting on Twitter. Celebrities are on Twitter. And you don't really hear of like, oh, hey, I saw this great thing on Pinterest the other day. Did you see that? It just kind of was a crazy statistic for me to see. And for that was actually one of the biggest reasons why this company caught my interest, because I think that they still have a lot of room to grow as a company. I'll summarize it, but another thing that stood out to me, and something that their CFO said during their earnings call, is that they are majoring in experience and minoring in leveraging their money to produce revenue, basically. That's a little bit of a summary, but what I got out of that is, first off, it's very similar to a Jim Rohn quote, so that's why I caught my interest. But another thing that just really made sense to me is, I think when they say majoring in experience, from what I saw, that stands for both the consumer and the customer. And there's a difference. So the consumer would be your person that does just log on to Pinterest. They have all their pin boards and searches it, just uses it as it's intended for. The customer is going to be the people that place ads, which is right now Pinterest's biggest source of revenue. And the reason why this is beneficial for the customer is because Pinterest has a focus right now on leveling the playing field, basically allowing for small or mid-sized businesses to be out there competing with larger businesses. And for the consumer side of it, as many other businesses do, this is nothing revolutionary, they do have their targeted or focused ads, which does keep people on their page longer. And if you saw from that quote, shopping is also something that is increasing dramatically or drastically for Pinterest. And sounds like it's a similar feature to Houzz, Houzz. I don't know if anybody out there uses it. Essentially very much like Pinterest, but specifically for homes, and it's something I've kind of seen for real estate stuff. And basically, it's like, if you want to look up how to make this wall less bland and, maybe have some pictures or a shelf or something, and you are on Pinterest and you see the shelf you like, you can buy it directly from the website using Pinterest, and they'll earn a commission from that. Now, that is a very small portion of their business, but as they mentioned, it's growing faster than Pinterest itself. So that could be a huge area of opportunity for them in the future. Now, to kind of stay on the topic of areas of opportunity, but also to circle back to their monthly users. If you look back to the monthly active users, when you look at the breakdown between US and international users, which is how they break it down, you can see that international users far exceeds just US users, which makes sense. It's one country compared to the rest of the world. But what I found interesting is when you look at the average revenue per user, the US user generates a significant higher amount of revenue per user than international. And as we can see here, they say that they get around $3.85 per user. That is a lot of money per user to have. And if we look on an international basis, it's only 21 cents. So to me, the US is a smaller portion of who uses their platform, but generates, I don't know what that would even be, like 100 times more revenue per person. So I think that the international space for Pinterest is going to be another huge area of opportunity. If they can learn how to make a little bit more profit per user in that area, then they should become profitable very quickly, probably even sooner than 3 years, hopefully maybe within like 2 years. So I think between both shopping as well as expanding this international business and trying to capitalize on that opportunity is something that can drive Pinterest to become a very successful company. And not saying they're not already, but obviously they have a few kinks to work out and they're not profitable, which is something that I always pay attention to. But when you look at numbers like these, it's just very hard to imagine this company won't be profitable anytime soon. And lastly, the reason why I like it, it's a founder-led business. You guys know I'm a fan of that, so I don't really need to harp on those details. But I do have two gripes about this stock. First one, it's expensive. As we saw with that price to sales ratio, it is a very expensive stock to own right now. So might not be one that I would put a lot of money into right away. The other gripe that I have, and we'll see how this one goes because we'll just have to watch it play out. But earlier this year, there was the boycott from placing ads on Facebook and Twitter. A lot of companies said that they are going to stop posting ads on their page. And that led a lot of people to Pinterest for doing their advertising. And that's what we call a tailwind. So that's what had partially this dramatic increase in their revenue was people now putting their advertising dollars into Pinterest instead of Facebook and Twitter. And while that was great for Pinterest as the business, I don't know how sustainable that is. And that's why I say that's something we'll just have to keep an eye out for, because that could be a temporary thing. And I think a few quarters of information, as well as if you want to take the time to pay attention to Facebook's and Twitter's advertising revenue in their earnings call, I think that's when we'll start to see this play out. So personally, I don't think people will necessarily leave Pinterest if it was very effective for them, especially for those smaller and mid-sized businesses. But I don't think they'll maintain that same amount of advertising dollars from these companies once this boycott is kind of over and people go back to doing their ads on Facebook and Twitter. So again, that made me a little hesitant, but those two reasons don't really outweigh what I see as potential for this company. With that said, it is one that I'm going to add to the portfolio. So let me take care of that and I'll be right back with you. All right, so I did go ahead and add 75 shares to this portfolio, which is a lot, and it's probably a little bit more than I anticipated. But I feel comfortable with this company because, as I mentioned, they don't have debt. Their quick ratio is absolutely insane in a good way. And they have a lot of opportunity to continue to grow as a company. This isn't one that I think has already kind of reached its peak and is now just going to plateau. I think this company will still climb up the ladder and continue to expand their presence. Whether that maybe be moving into things like video or just sticking with the pictures. That part I don't know, but I know that this shopping is going to be a huge opportunity for them as well as international markets. And that makes me comfortable adding this to the portfolio. So good to see. What's even better to see though is that this portfolio finally made us some money. We were in the red for a very long time with this, really since I started building this. So to see we're now at $5,400,000 is good. I'm still confused about Etsy, but I don't think that'll ever make sense to me, so I'm just going to stop bringing that up. Switchback is making us money now. DR Horton was a powerhouse, bringing us $221, and ARC $292.50 in total gains, which is good to see as well. If you want to know my thoughts too on the whole Kathy Wood thing, losing her ownership over ARC, I'll make a follow-up video to that. This just isn't really the time or place for me to go into those kind of details, but leave a comment below if that is something you think you'd like to hear me talk about. That said too, I hope you enjoyed this video. I'm going to wrap up here. If you haven't noticed, I've been going kind of quickly. I have a very important meeting pretty soon, but wanted to make sure I got my Watch This Wednesday out to all of you. So I hope you enjoyed this video, and if you did, I hope you liked this video, and again, consider subscribing, because that is super awesome of you. And if you wanted to give me an early Christmas present, you can definitely subscribe to my channel. Also, in the comments below, let me know if there's any stocks that you want me to take a look at, or ETFs. Again, ETFs are kind of my background, so if you have questions on ETFs, please let me know and I'll gladly make a video on those. Those are pretty easy for me to do because, again, it's just an area I have a little bit more knowledge on. That said, I'm going to wrap up here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and as always, I'll see you next time.